your questions in the Q&A section for panelists to see. Before handing over to Sandeep, who is the moderator for today's session, I would like to mention that Sandeep is the one who is leading the Bharat Inclusion Initiative at CICO since 2018. Thank you, Sandeep, for joining us as a moderator. Would hand it over to Sandeep now. Thank you.
Thanks. Thank you, Ghazal. Lovely to have this opportunity to host this fireside chat. I'll just say a couple of words about the initiative itself. The Bharat Inclusion Initiative, it's essentially an effort towards equipping entrepreneurs with the knowledge, the skills, network, capital, and the resources that they need to build impactful solutions for Bharat customers. Right. And in this endeavor, we are supported by some of our like-minded partners, which includes the Bill and Melinda Gates Foundation, JP Morgan, the Michael and Susan Dell Foundation, the MetLife Foundation, and the Omidyar Network. And under this initiative, we have been doing some seminal work in the space of financial inclusion through the Bharat Inclusion Research Fellowship. And the fellowship is an effort towards generating deep knowledge in the space of financial inclusion for the underserved segments. The purpose of the Bharat Inclusion Research Fellowship is to inform practitioners of the gaps and the opportunities that exist in this space that they can leverage to create those solutions. And recently, we have actually published one of our studies under this research fellowship on the financial lives of the urban poor households. An exciting study that recorded and analyzed the financial lives of 200 urban slum households over an entire year. And today we have with us the researcher who actually did that study, Monami Dasgupta. She is currently head of research at D91 Labs at Setu. Monami, welcome. So Monami has previously, she was a researcher at the Household Finance Research Initiative at Dwara Research. She holds an MPhil degree in Development Studies from the Tata Institute of Social Sciences and a master's degree in economics from the Mumbai School of Economics and Public Policy at Mumbai University. Now that's the researcher. We also have a practitioner and an experienced one at that. That's Hanumant Rawat. Hanumant is currently a director at the American Indian Foundation, and he's been forging strategic partnerships and leads the livelihood programs at the AIF and has been doing that for over a decade. He brings with him close to 3 decades of development sector experience across different geographies in India. Prior to this, he has he's been on leadership roles in organizations such as the Raymond Group CSR, at the JK Trust, Action Aid, and many such organizations. He writes frequently in business dailies, and he holds a master's degree in economics from the London School of Economics. Hanumant, welcome to the discussion. Glad to have you here.
Thank you, Sandeep.
So we'll get down straight to what we are, what we want here to discuss today. You see, whenever we talk about Bharat, we suddenly, for at least most of us, we actually visualize the rural, the countryside. But at the same time, I guess for most people on this call and for many others, there is another Bharat that we actually see every day. That's the urban Bharat. And despite being so visible, we've seen that the urban Bharat is actually quite invisible when it comes to the financial inclusion space in general, right? On one hand, we have, they are essentially sold downsized products of India, right? And on the other hand, they are there are programs like the Manrega and the NRLM that are actually designed for rural India, but thrust upon them. So, and this in some sense is the topic of discussion, and the gap that we want to address with this discussion today. So once again, welcome all to this discussion. I will start, with a question to Hanumant. So Hanumant, let's discuss about this urban low and middle income group. How would you characterize it? If you could give us your perspective.
Thank you, Sandeep, for introducing, and thank you for inviting this. This is a wonderful opportunity, for people like us who want to basically have gone through multiple experiences, and an opportunity to share with the new aspirants who are trying to build up some interesting products and services for this you say urban Bharat, no, the urban poor, yeah. So I think the biggest question actually is that how do we characterize them? You rightly said, and if I could think of a term which sort of cuts across this whole population, it's deprivation actually. Yeah. So there are 5 set of deprivation which they actually experience. So we know all these people across all the cities, but the first set of deprivation these people actually go through is around this income and employment, and the majority of these people are into informal sectors. Their earnings are uncertain, irregular, and employment actually is very, very casual. The relationship between the employer and employee is very, very uncertain, casual. The working conditions are very, very pathetic. So that sort of, we can go into detail of the entire thing, but that is one sort of deprivation which actually I think I characterize this urban poor. The second set of deprivation basically arises because of the living condition. The living conditions are dismal, and essentially they arise because of if I could think of a term, it's a shelter deprivation. Okay, because they live in the areas where actually for them actually is when most of the people like a migrant, they would land up in as a relative house, and they will go to rent a place shared with the 3-4 people. It's a journey actually. Yeah. And so this deprivation actually because of a lack of water, the places they live, maybe one time the water, the electricity is uncertain. There's no garbage collection facility in those settlement where they live. There is and because of that, they actually end up paying to the alternative supplier. So if you see like a lot of these places, because they are supposed to be, not a formal places actually, like slums or unauthorized places, they live, So the quality of service, the municipal service is very, very pathetic, yeah. So which actually create a kind of a, very pathetic living condition. And third sort of deprivation actually arises because of this whole, I think the vulnerability, exposure to the multiple kind of a disaster. So suppose there is a heavy rain, so the flooding will happen mostly in those areas. You would know like some house got collapse, it will happen in that area, some sort of infection happens, it will happen in their area. Yeah. So they are risk and vulnerable to these kind of a range of a natural and non-natural disasters. Yeah. And the third set of vulnerability basically arises around the mobility, because they live in those areas where which are sort of may not be connected with the public transport. So they have to commute a lot for the earning, or while they provide the services to the formal colonies, but the places they live are not connected to the public transport. Okay, So this whole long hour of commuting and the paying higher amount is one of the, I think, the deprivation they go through. So that is the fourth one. And the last one, I would say, around this whole exclusion. So they're excluded by the range of the welfare schemes and the various provisions. It's like you had a kind of a second citizen, while they provide range of services to the city, okay, and able to basically make the city run, but they are excluded from the range of things actually. Yeah. So these are the five sort of deprivation which actually I would think are peculiar to these urban poor. Yeah. So I'll just take a pause here. Yeah.
Great. No, thanks a lot, Hanuman. That creates like a wonderful milieu, right? I mean, a framework in which you have to think about the lives of the people that we are talking about. Monami, I think this is a good context that's set, right? And I'm sure you'd have seen all of this during your study.
Yes.
Now, when I mean, would really love to get your take now that we know a bit about their financial lives is what is discussed now. Sorry, the general environment in which they live. How does this impact their financial lives?
Right. Firstly, thank you, Sandeep, so much for organizing this, for the fellowship, and for giving us the opportunity to talk about a segment of population that is not very often spoken about. So linking back to the answers that already Hanuman gave, it was an excellent framework. Taking a step back, I would also like to kind of characterize what does my experience of looking at urban slums, urban poor. So I feel like this set or this cohort of this population, they have a unique set of economic, financial, and social risk, which is very different from the rural poor, and some of which Hanuman has addressed, but I would like to address that again. So for instance, when we talk about economic risks of urban poor or urban slum households, these risks are associated with non-contractual informal jobs. And today we know 93% of our labor force is employed in informal jobs. Of course, everyone's not living in the urban slums, but that's still a very significant number. Along with non-contractual informal jobs, they also have very volatile income flows and irregular income, which means that they don't know how much money they are going to get, and they don't even know when in the month they're going to get that money. So obviously, all the products that are created around very watertight systems of periodic investment, monthly investment, monthly repayments, they all fall flat on the face because it's very difficult for them to predict how much money they'll get every month. There's also a set of financial risks that they probably don't perceive it at risk, but from where we stand, we completely understand that this is a huge risk, which is to say about their preference for informal finance. This informal finance comes at usurious rates. They are high costs. They are based on connections. There's a lot of threat involved in it if the repayments don't happen on time. There's a lot of taboo involved in it if you take a loan from someone and don't help them out when they are in need. And there's a lot of financial and non-financial barriers that come from their end, because of which they can't access institutional banks or brick and mortar branches. And as we've also discussed this previously, that why is this problem so important to talk about? Because for the longest time, financial inclusion was all about giving access to financial institutions, and those could be geographical access or access to products. And now we're talking about a set of a population which has complete access. Around every slum, you will see high-rise buildings, and you will also see branches of banks around them. But there's the same segment of the population that don't ever enter those doors or don't, access those institutions. So that's another risk. And the last risk that cuts across a lot of their other, lifestyle or how their lives move on is social risk. And what we mean by social risk is the non-homogeneous social groupings. If we observe very closely, in every urban slum, there is some amount of gatekeeping that happens. Not everybody can go and live anywhere. If you have a predominantly Hindu slum or even a slum which has people favoring one kind of political party. They're intolerant toward other kinds of people. So habitation or giving them space is not that easy even among them, despite of having networks. Other than that, there's also very high incidence of crime among them. So, when we talk about keeping cash in the house, yes, that's what they prefer, but it's also very dangerous. This is also one of the reasons why I found on the field that people, and because my field work was in Chennai, people like to invest in gold. They are, in fact, they don't have to be trained from first principle basis that why gold is a good commodity to invest in, but they would not dare to keep that gold at home. They would either wear it or pawn it at a local jewelry shop. And then, of course, there is also a demonstration effect that affects them, that if they live in an urban area and they're surrounded and working at places where there are people trying to run after urban aspirations, and that they also want to be there. So, if we start understanding where they're coming from, we'll probably move an inch closer to understand what products can actually speak to them or how to approach this segment of the population. I'll pause here.
I mean, two wonderful frameworks that we got, right, to look at. One is more around, the deprivation. The other is more around the risks that they carry, and some insights, of course. I'll say this now. Let's say I'm looking at the lens of an entrepreneur that's building solutions for this, for these people, because ultimately, I mean, they are a very, very large market, right? And they are increasingly going online. Likely that over half the people already have access to internet through their mobile phone. It's probably over 2/3 or close to 80% might have access to the internet by, let's say, 2025, right? As India moves to something like 1 billion people on the internet. And at the same time, yes, there is some disposable income that these people do have, right? So as an entrepreneur, that's an opportunity. But then I need to build for them in order to tap into that opportunity. So my question here would be this. I'll start again with Hanumant. What do we know about this customer? And of course, what do we also not know about this customer as yet? So the intent is, what are those insights on which I can anchor my products for these customers?
I think this is very interesting, Sandeep, because this is exactly the keep bothering everybody, who is trying to, as entrepreneurs, trying to venture into this space. And since I have personally mentored a lot of people, and I used to wonder, there's a lot of excitement around, a lot of stuff, a lot of knowledge is there, awareness is there. But generally, they used to miss three aspects. And those three aspects, I would summarize the 3C. The first C is around this, I think it has a connection with the term you used in the beginning called the invisible. Okay, they are the visible, but they are invisible. So first is the context. They haven't figured out how it will operate in the context, how it will operate in the context it is going to work. So that is the first, the challenge which I experienced with lots of entrepreneurs who are trying to build up some product. People do have a kind of a peripheral and kind of a generic understanding about the context, but not enough deeper understanding. Some of the point, Monami touched, are not taught in the B school. This is only experienced. So that context is basically, something which I found, people don't know much about it, how it will operate. The second was the connect. Connect means like the because predominantly the lot of transaction actually is around the cash, and then there is a lot of hype when around the digital. So how this, the cash and the digital basically connect? Okay, how they interface is like when I changed my mobile number, I was scared because my number will change, but the operator said, no, your number will remain same. So I was very comfortable. I got confidence. I don't have to basically go through this hard work, of changing my. But that is not there. So the informal economy, informal sector workers, still predominantly use the cash. It's a cash economy, but how it basically interface or connect with the digital space, that is something people haven't cracked it properly. Yeah. So that is the second C. And the third C is basically collaboration. I don't know, because in the one is the corporate world, the moment you say we're trying to collaborate, you get scared. My IPR might get stolen. No, actually, a lot of people have tried, have been working with them. There are NGOs who are working with them. There are NGOs who have an entrepreneur bent of mind. They've been working with them. Some of the name you mentioned at the beginning who are supporting the CII, MSDF, the BMGF, they have been supporting a lot of these initiatives. So how do we collaborate? How do we partner? Okay. And the reason I'm saying collaborate, because that will basically reduce your cost of operation. Okay. Because there are invisible channels, invisible, the collateral which you have to leverage. So I think the 3C, the context, this whole connect between the digital and the cash, and third is collaboration, is something which I sort of struggle. I really wonder if people could focus on those three areas and build up a deeper understanding. I think one can really scale up. One can really make a breakthrough products and services here. Yeah, take a pause here.
Great, thanks. Thanks, Hanuman. I think that's quite interesting. We often tend to build, for these three C's based on our own experience, rather than what that segment needs, right? Great. So Monami, will put the same question to you.
Yeah.
Want to definitely understand, based on your research, how do you see, what do we know about that customer, from a financial inclusion perspective?
Right. So on this question, Sandeep, that from a fintech industry perspective, anyone who's trying to build for this customer segment, if I take a step back, when we talk about fintech, what we know is we are riding on the Jam Trinity in India, which is a Jandhan, Aadhaar, mobile, and all three working together to give us access to various services and products. What I understand, because I've spent some time on field and off field, and what I understand is fintech does have real potential to reach the unbanked population, but we are very much in early days. We've made some amount of breakthrough in terms of payments, which is the UPI, GPay and all that, and some handholding has also improved that access. A push was also because, the whole demonetization effect and the pandemic, not a push we were looking for, but it has led to that push. But we haven't been able to scale in products that speak to them. And in my opinion, products that speak to them are products that they're already using. When we're trying to build for somebody, for a specific cohort, instead of imposing a completely new sophisticated product on them, let's see what they're already using. So for instance, in my study, I found a significant, and I would say more than 85% of the population, percentage of the households that we interviewed were using chit funds. And they were using it regularly, not like one chit fund at one point of time. They had multiple chit funds going on. Some were the traditional chit fund product. Some were customized chit funds, like chit funds built for, let's say, next year Diwali. So it will mature only during next year Diwali, and you will get the money at that point. So that you are in your head, you are saving up for it, and you will also sometimes you get cash back, sometimes you get cash plus product back. So at today, we know there are probably just a handful of companies who've digitized the whole chit fund. There's a huge untapped potential lying there. Yes, there are some companies that have tried, failed, still in the stage of growing, and there are supply side issues. But definitely, this would not require us to go train them all over again. Then what is chit fund? In fact, if I go to somebody and talk to them about chit fund, it's quite a complex product. So it's not like urban poor do not understand complex products. They very much understand complex products. It's something they've been using for a very long time. They've seen their peers using, family members using, and they're comfortable in having a person within their locality who does the whole chit business, who is the foreman, who will collect and talk to everybody, and like to have that familiarity going on. The other thing that we've not done a significant breakthrough is digital gold products. And this was specifically important in the context of Chennai. Because as I said previously, gold is not a commodity that I have to sell it to them. I mean, Chennai people, they know that gold is a good inflation hedge. It's a great product when you need liquidity. You can just, sell it over the counter and get some amount of money. Yes, there are impurity issues and cost issues and all that, but still, it's one of the most easily accessible forms of, having liquidity on hand. But what have we done with digital gold? We have some products with Google Pay and Paytm, but all of us in this meeting know that doesn't really talk to that last mile customer. So we'll have to create products that doesn't completely take away the cash component from the product. So what I mean by that even if I'm investing in a digital gold product, I should be able to redeem it in cash at some point. I should be able to, have the option of redeeming in cash, redeeming in coins, redeeming in jewelry with some partnership with some companies. I'm just giving use cases that I feel could work for them. One reason why cash really works there, Sandeep, is it's tangible. People can see it. We've had companies who've gone ahead and tried to sell mutual funds to, rural poor, urban poor. Sounds good, sounds great, will help me save up for my goal. But can I see it? Can I see what's happening? How much will I get at the end of it? That doesn't work. They need a sense of certainty, even if the product is complex, that by the end of 2 years, I'm going to get back that much money is what I'm willing to save up for. So that's why cash works. And we need to kind of replicate those mental models to some extent when we are building digital products also. The other thing that can really push, and it's already to some extent pushing now, but can really push the whole digital drive or fintech drive in India is don't go completely digital. Have a mix of physical touch points plus digital interfaces. So what now is called the phygital mode of serving the last mile customer. Have agent-based payments. Let those banking correspondents come and help you in doing these transactions. Let there be some amount of hand-holding when you're doing this, because this is not native for them. They are not native digital citizens of India, and they would obviously not have the trust in the system so easily. So there are some of these findings that I feel that, we've not leveraged it completely yet, but there is a lot of potential in kind of taking it to the next step.
Got it. Great. Some interesting points there, right? First of all, their use of, there are certain traditional products that they are using, be it chit funds or gold. There's a certain comfort, and a familiarity that's extremely important, and it's important to leverage that. Then the redemption in the form of cash. Something which is tangible is probably a lot more valued by the segment, than something that's just software, right?
Yeah.
And most important, of course, is trust, right? Ultimately, every business is, of course, trust, and no different for this. One quick question on that about what do we not know about this customer? Are there things that we are still not sure whether they prefer this or they prefer this other thing?
If I go to look back, and a lot of my answers here are in the context of the study that I know. I think the perception of using mobile as a medium for transaction is not yet there. So when I was on the field, there used to be one phone within the household shared by all the people. I mean, think of it, one smartphone is at least a 14 to 16,000 range. Maybe Jio has come up with better handsets now, but I mean, that's not everywhere. So there used to be one phone, and obviously everybody does not have visibility into the financial transactions of everybody in the household. So I think there are two things to this. There is trust systems in the households, which get reflected in monetary transactions outside the household. So in most cases, when I was on the field, and because our respondents were the women of the household, and also because they were available, it not everybody in the family had an idea what the husbands were doing, or the husbands would not know what the wives are doing with terms of money. If you're taken a loan, they wouldn't know how much interest that loan is. If the wife is saved in gold or chit fund, it would be kept away from the man. And there is because of the whole socioeconomic fabric in a urban poor or a slum household, it is necessary for them to do this. It's a coping mechanism they use, to keep some amount of money just reserved for them. So that's a socioeconomic trust that's there. Apart from that, from a fintech perspective, I think it usually the highest amount of drop-offs come when there is failure of transaction, downtime, one big amount didn't go through. That's it. That's the end. Like I'm that the last time I used it, my 3,000 rupees didn't go. The bank asked for some charges, some processing fee that they don't have visibility into, and they'll lose trust into it. Like to give you like absolutely anecdotal example, my house help came up to me and said that, I want cash, don't give it to me in Google Pay because the bank has deducted 200 rupees. And that's absurd, but I mean, I have to trust her. So, failed transactions are the point at which people give up. Yes, UI UX does play some amount of role in communicating what a well-designed mobile app can do for the last mile customer, but that's only if we figured out the product well. I feel that's what makes or breaks trust.
Thank you for that, Manami. Hanmat, if I can come back to you, one question, what really do you think is going to make this financial inclusion work for this segment? You definitely talked about the 3C framework, right? But beyond this, either for the startups or even on the policy, the incumbents, banks, what do you think are those key bottlenecks that we need to solve for?
So maybe I can just draw an experience from one of the product and how we went about it. That could give insights to the audience here, how they can integrate into this whole the package that we have created actually. Yeah. Of course, there are multiple, but a lot of things I could, but in the interest of time, maybe I could just limit to one sort of a example, but just a small background, one of the questions we ask almost in the beginning of, maybe 15, 20 years back, when we started EIF in India, we wanted to make some difference on the urban space. And we asked this question, which are those occupations where there's a lot of crowding, concentration of poor people, urban poor. And these were, one was the construction workers, second was the domestic workers, the housemates, and third was the waste workers, and fourth was rickshaw pullers. So these are the four occupations where there was a lot of concentration of poor people, And we sort of started of course, these were the very known category in the non-profit space and the MFI space, banking space. They were not a known category. But we wanted to approach these segment very differently. Not like a typical traditional way of NGOs trying to organize them and demanding the rights, and neither typically charitable way, distributing free rickshaws or free stuff, So we want to basically think of a very, a business case that could be attractive for the various stakeholders, the government, the banking systems, the groups like you mentioned, MSTF and a lot of other people, who basically think of a hybrid, not purely a grant, non-grant kind of instruments. So, so just to basically, recall the experience of the one of the segment, which is rickshaw pullers. So we actually we did not give them a credit. Typical would have been like, okay, we actually try to understand what exactly is the problem, and we understood that there are two set of people actually. Rickshaw pullers is not just you have to unpack them. We were trying to make them, help them to own the assets. This piece of rickshaw, which is the source of income. But we discovered that around 15% rickshaw pullers are not interested to own the rickshaws. They want to rent the rickshaws because they want to go back in the season. But then there was a 75% category who basically began to settle down with the slums and the low-income settlements, and they bring their wives and families and children, and they begin to aspire to own that piece of rickshaws. What is the cost of piece of rickshaws? Is basically 10,000 rupees or maybe 12,000 rupees. When I say rickshaw, is basically rickshaw, trolley, and push cart. The three things, and that is a very visible thing in the market. You see everywhere in the country. Either people making livelihood through the vending or ferrying the people. So we want to basically focus on that piece of asset. How that piece of asset become accessible to this segment of rickshaw pullers, which is a major chunk. So we did not give them credit. We also did not finance from own grant money. A typical response would have been like, we use the grant money and distribute the rickshaws. No. We also did not simply link them to the bank. No. Okay. So we actually, what we did, we said, okay, we will bundle together a kind of package which has we said we will buy the rickshaws in bulk. We will look for the partners. We'll buy the rickshaws in bulk from those who are assemblers of rickshaws. Okay, it was quite a journey actually, that we discovered there's no one assembler like in bazaars or Tatas you find like car assembler, or you have one name, but rickshaw there's hardly you find. So that was interesting journey actually. Yeah. Then we said, how do we leverage that whole focus of public sector banks on the priority sector lending? But they were scared of, of losing their, capital. It might go default. So we said, okay, here is our, some sort of assurance from AIF. We will provide you a first loss default guarantee, FLDG. Yeah. Okay, we fixed deposited in their bank. I remember PNB, Punjab National Bank, came first, and they came forward to finance 100 rickshaws. Okay, but then we said, merely finance or merely buying rickshaws in bulk will also not help. We also think of how do we bring the third aspect of this whole leverage, the GLG model. The microfinance, they make small groups, SHG model, And the interesting piece was in this whole center was basically, they said the ownership basically will go to the, not like men, but it will be a joint, men and women, both. Okay. So we put together, as rickshaw has 3 tires, so we put the social piece, we put the financial piece, we put the technology piece here. We did try to innovate around the rickshaws, how to make the rickshaws, the easily drivable, we partner with IITs and a lot of entrepreneurs, but finally we discovered, we have to adapt to the city and the geography that rickshaw are used to driving. You go to Gorakhpur, you have a taller rickshaws. You go to the Saranpur, you have another rickshaws. I said, let's not try to have a one jacket fits all. We stopped that experimentation. Yeah, we said, okay, wherever people are used to the type of rickshaws, we'll go for it. And we bring those 3-4 elements together and we'll evolve a product. And from 100 rickshaws, we went on almost like the 1,35,000 rickshaws puller became the owner. And interesting part was that, we actually made the EMI, not the EMI, but you could say the weekly installment equivalent to the amount that they were paying to the thekedar. So whatever cash flow basically was going as a rental, we equated as a ownership installment actually. And that was very comfortable because they did not get a credit, they get a complete end-to-end solution. And very interestingly, we didn't give chukko save, like, we said, okay, let's celebrate. We'll call the police because they harass you. We'll call the district collector, because that will give a legitimacy. We'll go to the bank because they don't allow you in a bank. So everybody brought together in a big ground, and we had a big celebration. 500 rickshaw people will come together and they will get the rickshaw package. And then we start thinking about how we can bring the fintech and the smart SMS system, and then how do we aggregate the customers and how do we bring those aspects. But we try to solve the basic core piece, that how the aspiration to own the piece of rickshaw, because they were not able to do it because they didn't have the ID proof, they didn't have the address proof, they were not able to access that, and not many companies was willing to give them a credit, but in the name of rickshaws, but they're not owning the rickshaws. But we made, okay, we'll give this end-to-end solution because this is a source of a livelihood for the majority of urban poor, especially rickshaw category. So I think the way we went about this whole packaging and developing this product was something, it can give a lot of learning, how we need to basically design a product. Another experience in the housing space, how a developer in Ahmedabad partner with the NGO, non-profit Saath, with the housing finance company and develop a product, a housing product, which basically were curated and customized to the slum dwellers, and they graduated to that owning the house. Okay, and they got the 30% growth here. Okay, so there are range of products. So that's why I was saying those 3C. The third C was the collaboration. So how do you collaborate with the different players in the space? You try to leverage and sort of try to address the key pain point and develop this product here. So I hope it can sort of give some lot of inspiration. How do you basically develop your product? Because I think, as Monami said, there's a trust issue here. So we wanted to basically be seen as aggregator who basically bring together all the pieces together. So they don't have to basically run around for the, because even suppose we could have given the 10,000 rupees to a rickshaw pullers and they could buy it, but then they got cheated. Very interesting thing, they said if they individually buy the rickshaw, they get cheated, because in the name of the passenger rickshaw, they get the cycle rickshaws tubes or the parts. The whole market also cheats the urban poor actually. Yeah. So the giving money because they end up buying the same stuff at a higher rate. So we didn't want to basically just simply leave the cash in their hand. We want to with a complete product here. Sorry, I'll take a pause here. Yeah, maybe you took it longer. Yeah.
No, Hanuman, that's great actually. I think it's a excellent example of the 3C framework that you mentioned earlier, right? Also goes very much in line with what we always advise our startups, that don't build your products in isolation. You really must collaborate. That's the only way to go ahead. But brilliant. Thanks a lot, Monami and Hanumant. It's so many ideas, right? And I'm just even speaking with you. But I request the audience, if you have any questions, please do add them in the Q&A section. We will, we'd be happy to answer any questions that you may have. We'll take them, one by one. But before, as folks and, probably put in their questions, I do, just want to ask you, Monami, as well as Hanumant, any final thoughts, anything that you'd like to share?
Sure. So I definitely would like to share some of the things that, that ties back to your previous question of what will make financial inclusion work and what's the way forward. So, Hanuman, really love your example. I think it's not, it's not the job of one part of the whole ecosystem to function well. Everything has to function hand in hand to, give them the confidence and agency to carry out financial, what we call as financial well-being stems from all the other economic aspects as well. So from a financial inclusion point of view, there are a couple of things that sit outside the inclusion agenda, which needs to be fulfilled so that financial inclusion can work. So for instance, if we are talking about the urban poor slums, and if these urban poor families have been living in a space for multiple years, 10 years, 15 years, it's high time that the government looks at giving them land title for such plots, because then that will give them a collateral to borrow against. Some of the states have started doing these, but it's not a uniform policy all across. Secondly, given that the informal workers sector that is so significant in India, we definitely need to start the registration of informal workers in a centralized database. After the whole pandemic, since March last year, there has been a lot of talk about migrant population, and thankfully now people have started recognizing it as a centerpiece of urban poverty, and there is work going on in that space. So I definitely have high hopes from there. It'll also help them negotiate for better wages and better employment, which can directly affect financial inclusion. And apart from this, as I said previously, we need to start from where they are already. If you're building for a specific segment, in Hanuman's examples case, if it's for rickshaw puller, create a product which suits them instead of imposing your product on them. Have flexibility around investments, repayments, have auto renewal for insurance, because human capital is the most important thing in a urban poor or a urban slum household. And as one of the audience also raised the question about, is financial inclusion or microcredit? Definitely not. Financial inclusion was always supposed to be access to a suite of products, but credit has been the one that has been pushed a lot. It also has the highest margins from a supply side point of view. So we are definitely lacking behind in terms of creating better investment savings products for this category. We need to do a better job there. We need to do also a better job in terms of insurance. And one of the closing comments I want to give here is an idea that was suggested by Tarun Ramadurai in the Household Finance Report, where he has suggested that, to have like a leveler or a basic level for everyone to start off, all citizens in India should be given access to a suite of products, like an access to a starter pack of savings account, have access to micro insurance, which includes health and life, have access to micro pension and goal-based investment advice. Let everybody start from the same place and then kind of, customize their products according to their life goals or life needs. So I think if we can do that at some point, as the economy develops and financial inclusion space evolves, that probably could be a great starter pack. I'll pause there.
Thanks, Munavi. Hanumant, any few words that you?
When the urban poor, suppose this is the market here, and if you are trying to, we are aspiring to become the 5 economy, and by 2040 or maybe 50, we'll be a significantly urban year. So there's a huge market actually here, but I'm sure the companies, like formal companies, the known players will definitely try to, because of deep pockets, they will try to hire the talent, get the technologies, acquire and try to sort of penetrate into this market, okay. But a piece of advice to the startup is that don't worry, despite the deep pocket, if you are able to basically keep these 2-3 things in the mind, I think you can really be part of this whole journey. And the 3 things I would summarize the one is the asset piece. This urban poor have a range of assets. So try to identify, which are the assets, they use for earning, for whatever things they do. They may be visible, they may be invisible. So think of those assets, micro assets. And then second A is basically on the abilities. How do we enable them? How do we bring those services and the product that will basically offering that will build up their abilities? Okay, keeping in mind that they have a constraint of time. Suppose you want to build up a skill product, okay, but they don't have a time to go through a 9 to 5 kind of skilling program. In Ahmedabad, I remember, we used to run the skilling center after the 8 o'clock for the plumbers, for the construction workers. So we actually adapted to the timing. So ability is very, very important. Okay, then third A is basically around the aggregation. Okay, so how do you basically act as an aggregator here? Okay, when I say aggregator, it's very important to, I would definitely urge all of you to spend some time going through this Ministry of Housing and Urban Affairs, which is kind of a, trying to spread this the smart city mission. Then you have this National Urban Livelihood Mission. Then you have the Amrut Atal mission for rejuvenation for urban transformation, urban local bodies, okay, the Swachh Bharat mission. So of course these are the larger scheme, but please do spend some time with this ministry website and try to understand the larger ecosystem, how things are moving. So you can basically leverage and then and then create a kind of an aggregating framework. So build up their abilities and the assets here, and that will help them to basically come out from this vicious cycle of poverty here. Okay. So, and I'm sure there's going to be, but last piece of advice in the excitement of technology, don't lose the sight. I know unless you have a technology piece in place, the investor will not are reluctant to look into the product here. But in the excitement of technology, okay, don't lose the focus on the people actually here. Try to understand, the deeper, what are they capable of, because they're working poor. They are not poor, they are working poor actually. Even the Grameen Bank example in Bangladesh have worked with the beggars. Beggars have basically acquired the assets, okay? And the Grameen Bank has basically developed a product which basically fits with the beggar, okay? So everybody who basically in the urban space is enterprising, okay? You have to figure out how do these 3A, aggregator, abilities, asset, you bring this together and leverage larger ecosystem, from the non-profit space, the government space, like I just mentioned about, and then the players like who are very keen to experiment with the hybrid financing model. The some of the name you mentioned, like they have been supporting CIE, Co, and various. I think the investor obviously basically keen also. So there's a lot of capital which basically is willing to get attracted, provided you are able to basically put this together. And last bit of advice, I think just spend time more with the non-profit space, because the urban poor has been basically studied a lot by the non-profit space. So do spend some time, do get some intern with you, or do get some people on sabbatical, so who can advise, and get some people on the board of your companies, so they can keep advising you. Okay, this will not work. This will not work. So you don't basically burn your money. Yeah. So.
Brilliant. Thank you very much, Hanwant. Wonderful. I mean, I have a lot of frameworks, a lot of tips on how I should now go about building. I think it's about time to get an idea to, just get started. Right. I think we have just a few questions here. But I'll start with Abhinav's question here. Monami, how do you see the urban poor accepting market risk by participating in capital market, both bonds and equities? It's an interesting question. Yeah.
Yeah. So as far as accepting risk is concerned, in my experience, urban poor is open to take risk, as I said, as long as they can see tangible outputs from it. If they are investing in something which is in the secondary market, in the capital market, it is the prerogative of the supplier to make them understand the product. I feel a lot of this is about awareness and what this product is about. But At the same time, one thing that can backfire from a capital market product is the slight bit of uncertainty of how much money will I get at the end of X number of years. But I feel like if we are able to handhold, and there are some companies, I think Kaleidofin has done some good work around not capital markets, but getting mutual funds to them. If we can connect, as Hanuman said, if we can connect it to their life goals or to something that they are working on. So if you're saying if it is a product that is for 3 years, 5 years, and we know that at the end of 5th year, your daughter is, you want to get your daughter married, or you want your child will be going to higher education. We need to connect it where their life goals. They are not, at the end of the day, they are not so much focused on what the product is. It is what the product can do for them. It's not like us, that, okay, let's go and try crypto, or let's go and try investing in small case, or, one of those companies that we keep seeing on Twitter. But it's like, okay, what can I get out of this product? Where will I be able to safely keep this money? And is it a guaranteed space where I will get at least some amount of money back when I need it? Liquidity is one of the biggest requirements of urban poor households. Getting money on tap is a huge requirement. That's why chit funds work. That's why gold works. Can I get my money when I want it? So I would say that's what I think, giving them access to capital market products.
Thanks, Bonavi, for that. There's one question on, should financial literacy, actually be more important than microcredit? Monami, I'll let you answer.
Yeah. So my take on financial literacy is a little different from the one that's, in the ecosystem about, make them aware of the products, make them aware of processes and all of that. See, I look at financial literacy and financial education in the same way I would look at an analogy of a doctor-patient example. So when we have like a headache or a stomach ache, we know the symptoms, we go to a doctor, we expect the doctor to do the diagnosis and give us the medicine accordingly based on XYZ test or whatever his understanding of the situation is. I would say if as financial practitioners, our work is as doctors. What we should expect from the last mile customer, or the customer who has so much going on in their lives, from getting an employment, getting money, day-to-day wages, getting everything together, getting 2 meals in a day, it's difficult for them to expect them to know financial products thoroughly. If they come to us, we are the one who's supposed to just ask them a host of questions around their expense, income, understand what their goals are, understand what their volatility or frequency of payment is, and then accordingly suggest a customized product or suggest an existing product which will suit their needs, which we in the financial inclusion or even finance protection parlance call it customer protection. We need to protect their interests best. Yes, I agree that some amount of financial awareness is always good to have from a customer's perspective also, but let's not harp on it, and let's not depend on that, so that giving them the responsibility to do what suits you best. No, they really don't understand how finance works or how certain products work. So it's not right for us to expect them to know that either. I mean, for the longest time, I didn't know how chit funds work, and it's pretty complex. So how can they, know how insurance works or how a term loan works? It's not that easy.
Got it. Thanks. There's one question for me. Let me just quickly take it. Hi, Sandeep. So the Bharat Inclusion Fellowship is meant only for young Indians, or is there an age bar? We are the Bharat Inclusion Initiative. We prefer being inclusive versus excluding people. So there's definitely no age bar when it comes to inclusion fellowships. But we do, come up with calls for, these fellowships on a regular basis. We have done 2 so far. So you'll have to wait for the next one, to be part of the fellowship. Hope I answer your question. There's one. Okay. Hanumant, if you could probably take this question, how would revenue be generated by a startup when their product actually serves the poor?
Just repeat again.
The question is, how can I think it's more like could also be an ethical question. I mean, how can you even generate revenue? When the product is actually intended to serve the poor, right?
Mm-hmm. I was in the beginning. I was saying that a lot of poor actually they end up paying for the services because they live in a kind of a situation where formal players, say for example like water services, electricity, is not regular. So because of the nature of their settlement, the tenure security is uncertain. So there are range of players who basically come up in the slums. Of course, when the slums mature, for example, like in Dhara, we will have the all known brand as providing services. But in the early stage of his slums, for example, you will come up, you will see like the range of alternative who are offering, say, water services, and the poor is paying higher than, say, like for those things or for that electricity, what normally a middle class person will pay. Yeah. So there is a myth actually that the poor is unable to pay. Okay, yeah. So poor are actually are willing to pay, are all paying higher amount to the range of services actually. Yeah. If you are able to, there is entrepreneurs who are able to put together a kind of a product or a service, say like water, a proper treated water, okay, with a kind of a the technology in place, a proper leveraging the existing channels that urban poor basically use, so the cost will significantly come down, and they can make a revenue out of it here. Okay, microfinance companies, okay, of course there is a ceiling of a 26%. Okay, so they do make a profit here. They scale up here. Okay, but there are range of products here. Housing product, affordable housing here. The example I was giving in Ahmedabad, this developer has partnered with the non-profit Saath housing company. They have made a profit here. Okay, and that product was basically not a kind of a top-down product. It was not a bank product. It was basically evolved product after consultation with the poor people, because how they want to go about it. Okay, very flexible. Like for example, like in typical housing industry, like the people only see is it's a kind of a fixed product, while it was incremental product here. So for them, housing is basically a continuum. So they want to expand a piece of a maybe toilet today, maybe something tomorrow. Whenever they have a kind of a, so they actually adapted to their what I think the Monami, you mentioned a lot about it. What I'm saying here that the revenue can be made, okay, provided you basically collaborate, and the collaboration will bring down your cost of business. If on your own you try to, it will be hard. But if you collaborate, you will make a revenue out, and make a profit. Yeah.
Right. Thanks, Hanuman. That's interesting. I think we have one last question. This from Latish Balakrishna. It's like approaching physically is a challenge, but at the same time, there's also a need to establish trust in digital products, right? So how should really a startup look at approaching this segment, this urban Bharat segment, given that this making that physical connect is a challenge, but at the same time you need to establish trust. So any insights from your research or from your experience with the startups?
Sure, I'll try to answer that question. So I agree approaching physically is a challenge, but I also think it's a necessary step. So for instance, one of the initiatives by RBI was the Aadhaar enabled payment system, which is basically a cash in, cash out point. And it is to say anybody, any Kirana store with a certain amount of capital can become an ATM. And that itself is a physical point of contact. As I said previously, if you want to sell or market a product to a group of people who are not digitally native and who don't have haven't built the trust around digital systems yet, we need to give them something tangible. We need to handhold them. So it has to be a combination of physical and digital. What one way was to get have these set of kirana stores, the mom and pop stores that are around every slum area, every urban, every few meters you will get one of these shops. Get those shops on board to every shop has UPI now. It's any shop you go and you can literally pay through Google Pay. Same way, if they can become points at which you can withdraw your money, or you can give them the money to credit it into somebody else's account as remittance, and handhold them, that I know that when I go to my regular shop, I can give them that 1,500 rupees and they will send it to my wife who's back home. And this has been proven to be a successful transaction. Trust will build. But yes, it is not easy to sell them an only digital product. It will take a huge amount of time. UPI thankfully has gone to that extent now. It's also, as I said previously, because of the pandemic, contactless, all of that has pushed people to experiment a little bit, that let's say if UPI is working, and after 5-6 times when UPI worked, they're like, okay, now I'm confident, I think I can go out of the house without my card or without my cash. But it takes time. It won't happen overnight. It won't happen just because we want it to happen. We have to try to engage more with people who are living there. We need to engage more with the institutions that are around them and connect with them. Nothing will happen in isolation.
Thank you, Manami. Thanks, and thanks for staying back for a few more minutes to take those questions. Hanuman, Manami, great to have had this discussion with you. Some wonderful insights that even I have got through this discussion. Understanding the context, building collaborations, and of course, it's really about that building that trust and being able to reach the customer. So lovely having you on the call. To the audience, thank you very much, for listening in and for your questions. Hope that you got some wonderful insights out of this discussion. And Ghazal has shared, a link to the report, that Konami's worked on. Please do leave in your comments. So there's some wonderful insights, and hope you are able to, make best use of all the insights that we are generating through the program. Great. Thank you very much.
Thank you so much, Sandeep. It was a pleasure, talking about a topic that is very close to my heart, and I really I'm very fortunate to get this opportunity to work and get a great fellowship from CI Bharat Inclusion Initiative. Thank you.
Thank you. Thank you.
Thanks, Hanuman.
Thanks everyone. Thanks, Sandeep. Thanks.
Bye.
Bye.
Thank you.